Hi, everyone. My name is Ijeoma Genevieve Mbamalu. I'm Senior Editor and Managing Director at MUIPR. MUIPR is a boutique PR group and a news publishing, with a news publishing business. We are kicking off the new year in a very, very sort of big way with Skyler Fernandes. He is a growth capital expert, and he's a TED Talk speaker, and is the managing partner at Simon Venture Group. Welcome, Skyler.
Hey, thank you. Thank you for having me.
And so we've got, we've got a few questions for you. But before we get right, into it, I want us to talk a little bit about your background as a venture and growth capital expert. I know that you're a published writer, a speaker on a variety of topics in the VC arena, at least. So through your personal investment firm, you've also seeded a lot of entrepreneurial ventures in a variety of key verticals, right? Specifically within the global tech space. So talk to me about how easy it was for you to perhaps break into the global VC ecosystem.
Sure, actually, that's a great question. The history of how I got into venture capital and even global venture capital really started when I was in college. My first internship that I had was working at Standard Bank, which is the largest African investment bank. And when I was on the floor, I was always the last person to leave, and this other gentleman named Yuvan Naito. Yuvan was also one of the last people to always leave, and he was in a totally separate group, and he kept coming over saying, "Who are you? Why are you always the last person here?" And so we became friends, and Yuvan eventually left Standard Bank to go and became the president of the South African Chamber of Commerce in America called SACA. And he asked me, he said, "Sky, would you like to come with me and help kind of launch the South Africa Chamber of Commerce, launch a lot of the initiatives that are happening there?" I said, "Well, what type of initiatives would we be doing?" And he says, "Well, it would be a lot of entrepreneurial things. We would do focused on cross-pollination entrepreneurship between Africa and the U.S. And we would also be probably doing things with private equity, venture capital." And I said, "Sure, sign me up." So I became the vice president of the South Africa Chamber of Commerce. Over the years, about 7 years, I eventually became the COO and then became a board member of the South Africa Chamber of Commerce. And during the time there, we did some very key initiatives that actually got me really into venture capital. So one of the things was called the Missing Middle Initiative. And that's actually what I gave the TED Talk on a number of years ago. The Missing Middle Initiative was to focus on the size of venture capital, which is larger than basic angel investments and seed funds, but smaller than bigger growth capital. And the reason it's called the missing middle is that there's very few funds that invest, call it between 500,000 to 2 million. And so this gap, this missing middle gap of financing would be ideally for spurring a whole generation of entrepreneurship globally if it was available not just in the US, but in Africa, Europe, Asia. And so I met with a bunch of venture capitalists. We've ended up coming up with a few different new fund structures to create a whole new asset class for venture capital and create funds that didn't really operate like normal venture funds to be able to create that new investment focus. So that was kind of my first break into understanding venture capital, talking about it. And then I eventually became part of a venture fund called Centripetal Capital, where I was for about 6 years. And so Centripetal invests pretty much across a very wide spectrum of industries, also does very, very early stage stuff, later stage even does acquisitions. And there is when I got a lot of my initial venture capital experience. I also started my own seed fund called One Match Ventures. And One Match Ventures became a place I did a lot of personal angel investing and also created a lot of resources that have done pretty well within the venture ecosystem. A lot of these resources are now well known globally, like my best startup pitch deck. That's become the #1 startup pitch deck for startups to use when pitching venture capitalists. I think it recently crossed 200,000 views and downloads. But
Wow.
if you go on Google and you put in VC pitch deck, it's the #1
Number
search
one.
result. It
Nice.
shows up multiple times on the first page of Google.
Yeah.
But it's now, that pitch deck for VCs is now used by a lot of business schools. It's used by a lot of accelerators, and it's really become a critical template for startups to use. And it's a great resource for everyone. So a lot of times it's a very confusing question of what do you include in a pitch deck when you're pitching to investors. And this way, the one great thing about that resource is it's an aggregated wisdom across a lot of the top venture capitalists, a lot of the top angel investors. So entrepreneurs really don't have to look at like 10 different pitch decks to figure out what they want to do. This gives them one core deck to use.
Absolutely.
So that was the initial. It's a great question you asked. It actually, how do I originally get into more global focused venture capital, not just venture capital? And it was really because of Yuvan. If it wasn't for Yuvan, meeting him at Standard Bank, I wouldn't have got into that. That's how I originally got started.
Definitely. No, that's exciting. I mean, I think your resume speaks for itself, and I think that the question was structured in the way that it was because I realized reading going through your background and seeing all the sort of the publications you've published, the speaking engagements you've had. I think if there are other folks who are going to be listening to this who are maybe in B school or sort of looking to get into the space, hearing your words of wisdom about, or at least your background rather, about how you got in, could hopefully prove influential and inspiring.
Actually, one interesting thing that I'll share with the audience, and it's certainly been very valuable to me, and I think for other people, and certainly in venture capital, is if you want to get into venture capital, it's a lot more about your personal brand. And I think with hedge funds and private equity, sometimes people get lost within the large pools of people there. But in venture capital, it's one of those spaces where like everybody has to have something almost cool about them. They have to have a personal brand where people know them. And oftentimes in venture capital, people know the people at the venture funds more than they know the venture capital fund. And so building the personal brand is critical. And my current role, I recently launched a new venture fund called Simon Venture Group. And I wouldn't have been able to do that if it wasn't for building up a personal brand. Where Simon's a large corporation. They're an S&P 100 company. Simon's the largest retail real estate company in the world. And they reached out to me and said, hey, would you be interested in launching our venture fund? And the whole process of beginning to end of thinking about launching the venture fund, being the person that they would end up selecting really helped because of the brand that I had created prior to Simon. And building up the past 6-7 years of VC eventually put me in a situation where I could launch my own venture fund with a real focus on a particular industry. In this case, it was retail, technology, and e-commerce. And the other thing that really helped with that was Simon was looking for advice on what is the best way to structure a corporate venture capital fund. And I had not come from corporate VC. I came from traditional venture capital. But I had a lot of friends that were in venture capital. Like one of my friends is Andrew Cleland, who is one of the partners at Comcast Ventures, is one of the largest corporate venture capital funds. Same thing with one of my friends, David Crane. He's the founder of Google Ventures. And then I also spent with like Intel Capital, Samsung Ventures. I met with as many corporate VCs as I could, and I put together a wisdom or a knowledge base and a pitch deck on best practices of corporate venture capital, worst practices of corporate venture capital, where the bottlenecks happen, where the war stories. And because I was able to aggregate that wisdom and also share that with Simon, I think that played another critical role of why Simon ended up choosing me to end up launching their venture fund. And it allows you to try to create the best of breed of corporate venture capital. And there was lots of people I'm sure that Simon could have picked, but it really went towards picking someone who had the right brand and had the right network to be able to figure out how to create a corporate venture capital fund.
Absolutely, absolutely. No, those are great words of wisdom, and you've actually sort of helped sort of facilitated me into my next question. Is with Simon. So, I'm aware that sort of in recent years, there've been sort of a lot of accelerator programs that have been a key part of tech and innovation, the tech and innovation startup scene around the world. A growing number of successful startups, some of which you've probably seeded, have come out of incubator programs, and it's encouraged more and more individuals and brands to apply to these programs. Now, recently, Simon Venture Group launched its own program called Simon Launch for specific verticals within the retail industry segment. And from what I gather, Simon Launch will provide 3 winners with $25,000 in capital, marketing, and PR assistance, as well as a 12-week sort of practical, in-depth training in Silicon Valley. So, what other types of support will be offered to the winners, and are there sort of other portfolio brands that have received similar funding from SVG, or is this sort of your initial foray into
Sure.
that?
Well, yeah, I think that the reason I wanted to launch Simon Launch as an accelerator program for our fund was the same reason that I wanted to create the fund in the first place. When Simon first approached me thinking about launching a venture fund, I looked at the overall ecosystem of other venture funds, other corporate venture funds, and other accelerators, and there really wasn't a big presence or a big leader in pure in-store retail technology and e-commerce. A lot of venture funds and accelerators are more general. They just do all internet technology, or they're all biotech or all healthcare. And so at first, on the side of launching Simon Venture Group, it looked like there was a great opportunity here to take the lead and really be the center venture fund for the industry for in-store retail technology and e-commerce, kind of being the Google Ventures of retail. And then the same thing on the accelerator side. There wasn't really a great retail accelerator that I could find, and I said, let's make one. And so we partnered with Plug and Play, which is one of the top accelerators in the country. And they already had kind of an initial retail accelerator that we partnered with. And so yeah, as you said, we've launched in September. We're currently receiving applications for it. The due date for that is next Wednesday, which is January 14th. And you can apply on Simon Venture Group's website. If you go to simonventuregroup.com, you can click Accelerator and apply. We've received a tremendous amount of applications so far. I think we have a little over 300 applications.
Wow.
And I know the majority of the applications are probably going to happen in the next 10 days.
Yeah.
Or within the last 24 hours, because everybody likes to apply at the last minute.
Yeah.
I'm expecting to actually receive most of them then. But I'm excited. It's a great opportunity for retail startups, whether you're coming out of an MBA program, coming out of undergrad, to do from your current job. It's a great platform. Again, you're going to get a $25,000 investment.
Absolutely.
One thing you didn't mention was the free office space. We're going to give free office space.
Oh, nice.
Entire year, 12 months free office space.
Yeah.
At any Simon property around the country. And there's a lot to choose from since we're the largest retail real estate company. So you get a lot of property to pick from. And in particular, one of the properties is across from Stanford University and near Sand Hill Road, which is where all the venture capitalists are. So we have some good prime real estate that startups might want to work out of. And they'll be part of the accelerator program, which is the 12-week program. You're stuff that we're going to be seeing. I'm excited. It's really there's so many amazing verticals that people are working on. I think
that was going to be my question. What are the kinds of verticals?
You got some really interesting cases I like are indoor retail technology, like indoor data analytics. There's, for example, there's one company called Nomi, which they have cameras, Wi-Fi, beacons, and it's basically turning data analytics for the physical world, just like data analytics works for e-commerce, in understanding how many people actually came into my store, how many people came back to my store that were there the month prior. What is the number of people that are actually coming into the store making a purchase? What is the conversion rate? Where do they hang out in the store beyond just I know that they're standing in the part to check out. But e-commerce has had this for a long time. E-commerce, how many people came to your website. But so Nomi is one interesting company. There's a handful of others. There's things like wireless electricity, I think could be really interesting. The idea of being able to charge your device wirelessly without just having in your pocket, in your backpack, in your bag. That could totally transform retail spaces, as well as cutting away wires. The whole problem with batteries is they haven't really lasted long as we'd like.
Absolutely.
So that's an interesting space. I think e-commerce brands that are looking to open up physical retail could be an interesting one. There's more and more retail brands that are moving to opening up stores, like a Bonobos, a Warby Parker, a Trunk Club, even Amazon. Amazon's probably going to 2015 will be the year that Amazon starts opening up more and more physical locations.
Really?
Some of them very well may be in our retail real estate locations, which is kind of ironic.
Physical retail,
So I think that there's no shortage of interesting stuff, and I think when you think about Simon Venture Group and what we're investing in, it's kind of like investing in a city. If you think everything that a city has is pretty much everything that is important to Simon as the largest retail real estate company. It's parking technology, it's energy, it's security, it's recruiting of people. You know how many people work at all the retail locations and all the properties? It's data analytics, it's e-commerce, it's payment technology. So it's just a wonderful large spectrum of stuff. So I'm excited what we're going to see from all the applications.
You've actually sort of touching on sort of a couple of questions I wanted to get your intelligence on. So, we've just ended 1 year. We're in a new year, and I imagine that there were sort of a lot of trends and related retail innovations that occurred in 2014. So talk to me a little bit about maybe some examples of what transpired in 2014 and maybe what we should be on the lookout for that will probably revolutionize the retail tech space in 2015.
Yeah, I think I think last year, 2014, was really the year of much more omni-channel retail technology coming into the market that was actually actionable. So one example is actually one of our portfolio companies, Deliv. Deliv does same-day delivery from retail locations. So whether it's from the mall or a retail location, they will deliver things to your house. So, for example, if you went to Macy's.com and you ordered something on Macy's, you go to the checkout page and it says, would you like this same day delivered or on demand delivered at a particular time, either one? And you say yes, and voila, the package shows up at your front door. And the way that it works, and this is part of the whole omni-channel, I think, overall trend, is that someone goes and schleps it from the mall, from the retail location, and brings it to your house. It's not UPS. It's not FedEx. It's a person within Deliv's network that comes and brings it to your house. It's a good example. It's another thing of one of the real competitive edge that physical retail has over e-commerce. So Amazon can't be on every corner, but every corner already exists. So if you can tie Macy's.com or any e-commerce website to the physical locations of where that inventory is, then you can get things same day. You can get things in the next 2 hours. And there's a large trend overall. It's not just Deliv. There's Instacart that's delivering food when you want it. There's companies like Postmates that are delivering other stuff, like if you wanted toothpaste randomly. And Deliv is really playing the leading role within the retail space for any type of retailer. That's really the market that they're really owning. And 2014 was the year that they really started making deliveries. And 2015, I think, is just going to be a breakout year for Deliv and a lot of other companies in the space as people start they start merging really the different people. I think in the past years, there's always been e-commerce and there's been physical retail. And I think they're in everyone's head, they're kind of merging to be the exact same thing. And when you buy something online, it's not that you're just buying it online. You might actually be buying it online from a particular location and being able to actually know within like a 5-mile radius, oh, if I want a black dress, I can see all the places around me that have a black dress in my size right now, and I could actually go try it on. I could go do a little trip and try it on at 3 different locations, or I could buy it online and have it delivered, or buy it online and pick it up. So I think there's going to be an increasing merging or blurring of the line between physical retail and e-commerce.
Yeah, I think you're touching on something. I think one of the points you made. So we met each other about a month and a half ago at the Fashion Fest conference, and I think one of the themes from that conference was sort of this idea that the balance of power is shifting away from the retailer to a more sort of buyer-centric market, and so I think global leaders in the tech space or folks, brands in the tech space have to sort of be nimble, right, to flex and accommodate all of these changes. And I guess, making sure that when they do that, that they're still positioning themselves as sort of thought leaders in the space. And I guess this is where Simon really comes in. And I think with your VC group, there's a lot that can happen there.
I think one of the things that you find, and this was part of my own personal due diligence before I decided to launch Simon Venture Group, was really understanding where is the world going and what is not just the future in the next year, but what is the future over the next decade or 2 decades. And there was a few surprising things that I came across which kind of made me more bullish about launching Simon Venture Group. Everyone thinks e-commerce is huge, right? And e-commerce is big. It's like $300 and something billion big. But if you look at the total retail sales, it only represents about 5 to 10% of overall retail sales. 90% of retail sales are still in stores. So if you thought e-commerce was big, physical retail truly is huge. Versus 300 billion, it's like 4-point-something trillion dollars. Much bigger. And if you look at not only the size of them, but the growth rates was the other thing I found very fascinating. Forrester Research and eMarketer, if you look at their projections over the next 10, 20 years of the growth of e-commerce, the growth of mobile commerce, and the growth of physical retail, you find that mobile commerce, actually 2014 was the first year that mobile commerce and e-commerce had de-accelerating growth rates. So you kind of have them, they've grown really fast. Mobile commerce grew at about 80% in 2013. In 2014, it grew about 30%. And you're seeing a rapid de-acceleration of mobile commerce and e-commerce over the next 10, 20 years, which just shows you that e-commerce and mobile commerce are never going to be, at least not in the short term, at least for the next 10, 20 years, is not going to come even close to 50% or 75% of total retail sales. But one of the mysteries that I found was really fascinating is if you look at the growth of mobile, because mobile commerce and e-commerce are still growing, they're just de-accelerating in their growth. But if you look at what is behind the cause of the growth, one of the things that's a little bit of an unknown that I'm curious to see clarification on in research going forward is what percent of the growth of e-commerce and mobile commerce is actually attributable to physical retail. So, for example, if you have an iPad and you have an iPad in a store, is that an in-store sale or is that an e-commerce sale? And if you also are on your couch and you buy something online from a particular location that's going to get delivered to, you're going to go get picked up. Is that an e-commerce sale or a physical retail sale?
Yes.
So I think as you start having more and more technology integrated into physical retail, that's also part of the large growth of e-commerce and mobile commerce. And the attribution is interesting. And I think in the end, and one of the questions is, does any of this actually even matter? and I think the answer is no, in that it all goes to the same piggy bank.
Exactly.
Right? So if you're Victoria's Secret, if you're Brooks Brothers, Banana Republic, J. Crew, if someone buys something online or in store, it goes to the same piggy bank.
It does.
And you really want to make an omni-channel retail experience for your customers so they can really buy from anywhere, pick up anywhere, get delivered from anywhere. And that is embracing both physical retail and e-commerce. And my bet, based on what I've seen so far of key trends, is that physical retail, brick and mortar, is really going to be the foundation of omni-channel retailing and will be part of a big, the big part of e-commerce going forward.
Wonderful. This is really, really great stuff. And I think one of the points that you've just touched on is that consumers are becoming so tech savvy and they're really reshaping the rules.
Yeah, actually, I have a new name too. You have millennials, which are huge growth. I think millennials should really be called mall-lennials. I
like that.
If you look at actually their shopping behavior, they're digital natives. So millennials grew up with technology, but they are not choosing to replace their shopping habits with e-commerce and mobile commerce. They're shopping even more in stores, but they're using technology to help and facilitate that experience. You're finding the average millennial or millennial is walking into a Best Buy and they know more about the laptop they're buying than the sales associate, right?
Yes.
You're finding that there's a thing called showrooming. Showrooming is a big topic where people think, oh, millennials are just going into a store and finding what they want, but then they're buying online. But you find what's actually more common than showrooming is reverse showrooming, which is when you go online, you search and discover what you want, and then you go into the store to buy. It's actually 2/3 more common than showrooming. Everyone has reverse showroomed a lot more than they've showroomed. And that's going to continue to be a trend too. People are going to educate themselves, and you're going to go into the store to buy, and also to have that experience. I think millennials, one thing you find that they're looking for is they're looking for something to do that is experiential. They don't just want to be sitting behind a computer always. They want to do something with their friends. They want to socialize, and they want entertainment. And I think as you find, especially with Simon, a lot of our properties are really community centers. And they're places that people hang out. They're people where you find your boyfriend or girlfriend sometimes.
Yes.
It's where you go to the movies. It's where you go to eat. And so I think as you embrace that physical retail is more than a business. It really is a community center beyond a business center, and fulfilling millennials' needs of that experience. But tying it to e-commerce and making it seamless will really be where the future is.
Absolutely. And so a couple more questions, actually talking about the future. What are some, I guess, sort of top-line strategic issues or areas that, that brands, and they could run the gamut from startups to sort of major corporations in the retail segment need to have on their radar, right, in 2015, and perhaps what tricks do you suggest that they?
Yeah, I think one of the things that I'm seeing for retailers, which hopefully this will also be a big thing that'll happen in 2015, is not all retailers seem to have access to real-time inventory data. So a lot of them know what's in the warehouse, and if you go into a store, they can tell you what they have or what they have at other stores. But there's a disconnect if you were to say, can you turn your real-time inventory and show that on your e-commerce website? And like Best Buy does this, Walmart does it, Nordstrom does it, but the vast majority don't yet. And I think as you start having more of this seamless integration in the back-end systems of retailers, you're going to be able to realize the utopia of omnichannel retailing, but you need to have that real-time inventory data at every single location and a warehouse in order to be able to do that. And I think you're going to see more and more retailers putting in the technology investment to be able to move in that direction. Because I think simply just having an e-commerce website and having a mobile app is not enough if they're not connected.
Absolutely.
And millennials are expecting that to be connected.
Yeah.
So you're doing a disservice on your experience if they're disconnected.
Yeah, definitely. And so as part of your decade-long, and this is the last question, by the way, this has really been exciting, and I think we have a great sort of litany of things to be on the lookout for, right, in this year and sort of in the future. So as part of your decade-long career in the VC space, you've created, I think you talked about this already, this pitch deck, several on other resources for entrepreneurs and startups and investors. And are there any other upcoming resources or resources coming down the pipe that we should be on the lookout for?
There are. There's two more that I'll be releasing in hopefully end of January.
Oh wow!
One is a infographic on follow-on investment. So I found over the years there's a lot of resources out there on how do you choose to make your first investment, or how do investors think about making their first investment in a company. But there's not too much research on or resources on how do investors think about putting money in the second time and the third time into a company. And those are called follow-on rounds. And the best investors have proven that they're not just good at figuring out where to put money the first time, but they are really good at figuring out, as companies grow, where do they double down and triple down on the companies that are doing well. And so I created this infographic, which is really a decision tree, and it starts off with if the company's doing good, uncertain, or not so good, and all of the thinking that you go through of whether or not you decide to put more money in. And it's not obvious. There's a few non-intuitive conclusions in there. Like, you could have the company could be doing so bad that actually you should put more money in. You'd be stupid not to if there was a recapitalization of the company. On the other side, the company could be doing so good that the valuation is so high that you should stop putting more money in, because you can't really realize as big of a return as your first investment. And so I'm hoping that'll be featured in a few different places, potentially Business Insider. And the infographic also has a contributors, which is about the top 25, top 30 VCs in the country that I sent it out to. They gave me their feedback, and so they're listed on the side. So that's one resource that'll be coming out. The other one is a more simple chart that really shows the difference between an angel investment versus a later stage growth investment, what the definitions really are of everything, what is the average size of capital raised, what are the average valuations of those companies that are raising capital, and where are you really in your development of your business and traction, what are the expectations at those various stages. So I think it covers kind of a lot of the initial questions that a lot of startups end up asking.
Absolutely, absolutely. Well, this has been a great 40 minutes with you. I think we've covered a variety of topics, but what's really exciting, a couple of things, or what's on the. What are some of the top line strategic areas that folks should be on the lookout for, especially this year and in the future? And then your Simon Launch program, which we'll be pushing out to our network as well. You probably get double your 300 applications, but I know
more the merrier.
I know that you love that. But thank you so much. And like I think I mentioned to you, this video interview will be featured in our publication. It's www.blog.muipr.com. We'll definitely, summarize it and share the details with you and the rest of the folks who are in the audience today. So thank you again, Sky, for joining us.
Thank you so much for having me.
And I look forward to maybe connecting with you at some point this year, maybe midpoint, and checking in on sort of where things are, particularly with the with the 3 winners once you do select them.
Absolutely.
It'd be great to do a follow-up story. Thank you so much. All righty, take care now.
Cheers. Bye.
Bye bye.